Welcome to Vishnu Consultants. Today we will discuss about Section 8, that is company. In India, a non-profit organization can be registered as a trust by executing a trust deed, or as a society under the Registrar of Societies, or as a non-profit Section 8 company under the Companies Act 2013. A Section 8 company is the same as Section 25 company under the old Companies Act 1956. In other words, Section 25 company of Old Companies Act 1956 has now become Section 8 company under the new Companies Act 2013. As per Section 8 of the Companies Act 2013, a Section 8 company can be established for the promotion of commerce, arts, science, sports, education, research, social welfare, religion, charity, protection of environment, or any other subject. The Act further states that a Section 8 company can pursue the above objects subject to the condition that it intends to apply its profits, if any, or other income in promoting its objects, and intends to prohibit the payment of any dividend to its members. In simple terms, a Section 8 company must promote a public cause, and the proceeds earned by the entity must solely be used to support the state public causes on. Private limited company and Section 8 company registration procedure are very similar to each other. A minimum of 2 promoters are required to start a Section 8 company. One of the promoter director must be an Indian citizen and Indian resident, whereas one or more persons acting as directors can be an Indian national or foreign national. In addition to the required number of persons, the registered office address within India would be required for incorporation of Section 8 company. Section 8 company would be subject to the following conditions. A trust in India is controlled by the trustees mentioned in the trust deed. A Section 8 company would be controlled by its board of directors, similar to a private limited company. During the incorporation process, the digital signature certificate is obtained for the proposed directors. To obtain digital signature and DIN, the proposed directors must submit a copy of their PAN card, Aadhaar card, driving license or passport or election ID card, or any other government-issued photo identity card. Once the documents are submitted, the applicants must complete an OTP and eKYC procedure through a smartphone to obtain a digital signature in their name. In parallel to the digital signature application processing, the name approval application can be initiated for registering the Section 8 company to the Ministry of Corporate Affairs. The name of the Section 8 company must end with the words prescribed for this purpose, like foundation, forum, association, federation, chambers, confederation, council, electoral trust, etc. The name approval process can be completed within 1 to 2 working days. Once the unique name approval and digital signatures are obtained, your consultant would prepare the Memorandum of Association and Article of Association and Incorporation application for the Section 8 company. All the directors must sign the documents. Once the documents are signed and verified, the incorporation application is filed with the Ministry of Corporate Affairs. On approval of the incorporation application, the Ministry of Corporate Affairs issued the incorporation certificate, PAN and TAN, for the Section 8 company. The entity can now use these details to open a current account in any bank for conducting its day-to-day operations. 80G is a certificate that exempts a person making a donation to a Section 8 company from part or fully paying taxes on the donation amount. There is, however, a maximum allowable deduction criterion. The criterion is if the aggregate of the amount the SEC donates exceeds 10% of the total gross income, then the excess amount will not qualify for tax benefit. 80G certificate made its way into law book in the year 1967 to 1968, and it continues to be an important tax-saving mechanism for millions of taxpayers in India. 12A registration is a one-time registration obtained by most trusts after incorporation of the NGO to be exempted from paying income tax. Section 8 company, trust and NGOs having 12A registration enjoy exemption from paying income tax on the surplus income of the trust or NGO. Income tax exemption is available for all non-profit NGOs. Hence, it is important for all trusts, NGOs and other non-profit organizations to be aware of Section 12A of Income Tax Act and obtain the same soon after incorporation of the trust or NGO. Organizations seeking foreign contributions for definite cultural, social, economic, educational or religious programs may obtain FCRA registration or receive foreign contribution through prior permission route. It is preferable for an FCRA applicant to be a trust or society or a Section 8 company. The not-for-profit entity must also be in existence for a minimum of 3 years while making the FCRA application. It should also not have received any foreign contribution prior to that without the government's approval. Additionally, the entity seeking registration should have spent at least Rs 10 lakhs during the past 3 years or its aims and objects excluding the administrative expenditure. Statement of income and expenditure duly audited by chartered accountant for last 3 years are to be submitted to substantiate that it meets the financial parameter required to apply for FCRA approval. A Section 8 company is required to adhere to the compliance levied by Registrar of Companies and income tax authorities. Failure to fulfill their compliances requirements results in paying heavy penalties, and chances are such organization and its directors may even get disqualified for a period of time. Under Section 139 of the Companies Act 2013, it is mandatory for companies to appoint an auditor. The books of account and annual returns of the company shall be audited by the statutory auditor who will be appointed for a period of 5 years. The company is required to maintain a statutory register consisting of members, loan obtained, charges rated, its directors, etc. as enumerated under Section 8 of the Companies Act 2013. Annual general body meeting is to be conducted once a year within 6 months of the end of the financial year, and other board meetings have to be conducted. The board of directors of the company shall file the board's report in an appropriate manner consisting of all the financial statements and other annexures. The board report is required to be filled in Form AOC4. The company will get the balance sheet, profit and loss account, cash flow statement and other financial statements prepared by the statutory auditor, which is to be filled with ROC. Income tax return is to be refilled at the end of every assessment year before 30th September. The financial statement shall be filled in the appropriate form within 30 days from the date of annual general meeting. The annual return containing all the information like management details, shareholders details will be filled in Form MGT7 with Registrar of Companies within 60 days of the annual general meeting. For more such educational content, subscribe to Vishnu Consultants.